All right, so picture this. An electric vehicle company announces it's about to hit this huge profitability milestone. You'd think the market would go wild, right? Well, for EV maker NIO, what happened next was a stock downgrade and a massive headline-grabbing vehicle recall. So today, we're going to try and make sense of this whole puzzle.
Okay, so let's just dive right into this contradiction, because it's a situation that has a lot of investors really scratching their heads, wondering what is actually going on. First up, let's look at that analyst downgrade, a move that kind of came out of left field and definitely shook some people's confidence. So yeah, let's start with the news from Wall Street. A major financial institution weighed in on NIO, just maybe not in the way that a lot of people were expecting. So get this, just a few days after NIO shares its really positive financial news, JPMorgan steps in and cuts its price target on the stock from $8 all the way down to $7. Now, a $1 drop might not seem like the end of the world, but in the world of stock analysis, timing is, well, everything. And that's really the million-dollar question here. I mean, you'd think good news like this would get you an upgrade, or at the very least a positive note. So why the downgrade? This is where the story splits into two very different interpretations. So on one hand, you have the official story, which is basically, hey, this is a standard adjustment based on our market analysis. Nothing to see here. But then there's this counter-narrative, which suggests that the timing is just, well, it's too suspicious. This view raises the possibility of other financial motives, like maybe clients who are shorting the stock, betting that the price will go down and would definitely benefit from some bad press. Okay, so let's move on to the second big headline that really caused a stir. This one involves a very big number and a word that always makes investors and car owners pretty nervous. This was the number that was flashing everywhere. NIO filed a recall for over 240,000 vehicles. I mean, that is a huge number. And on the surface, it sounds absolutely catastrophic, like a super expensive problem for the company. But it's really important to look past the headline. So here's the key thing to understand. What this recall actually is. We're not talking about a physical problem where cars have to be brought into a shop for new parts. No. This is a proactive, over-the-air software update, kind of like when your phone updates while you're sleeping. It's for cars with older software, and it prevents a potential issue with the screen. It's a digital fix, not a mechanical one. And when you look at it that way, it's a completely different situation. From this angle, the recall isn't some crisis. It's just a quick, cheap software patch. You could even argue it's a good thing. It shows that NIO is committed to its customers, proactively fixing a potential issue on cars that are up to 8 years old. I mean, that's a level of long-term support you just don't see very often in the car industry. Okay, so now that we have the context on the downgrade and the so-called recall, let's circle back to that amazing news that got totally buried under all this noise. This is the really important business development that was happening in the background. And this right here, this is a huge achievement. In the entire world of pure electric vehicle companies, and by that I mean companies that only make EVs, they don't sell hybrids or anything else, only one has ever become profitable, and that's Tesla. Well, according to NIO's recent announcement, they're on track to become the second, ever. Let that sink in for a minute. To be only the second pure-play EV company to hit profitability is just a massive milestone. This is a super competitive, really capital-intensive industry. It shows a level of business maturity that very few have ever reached. So, when you put it all together, a whole new story starts to emerge. The argument becomes that the real story isn't the downgrade or the recall, it's the company's fundamental financial success. And from this viewpoint, all those negative headlines are just market noise, maybe even a distraction from a core success story. And for anyone who actually believes in that core success story, the price drop that happened after all this, well, it's not a reason to panic. Instead, it's being framed as a blessing in disguise, a potential opportunity to invest before the wider market looks past the headlines and catches on to that profitability milestone. So this is where we're left. It's a situation that really forces you to think critically about the information you get. When you see really positive fundamentals get met with negative market news, it's always worth asking that simple but really powerful question: who actually benefits from the story that's being told?